Market movements are all about global liquidity, particularly if you look at Bitcoin. So it's clearly a major issue to look at. I mean, basically what we're seeing right now is actually reasonably good liquidity conditions in the world. The Federal Reserve in the US has had to address the debt ceiling, and as a result of that, the Treasury General Account, which is maybe sounding a slightly wonkish concept, but that's the bank balance that the US Treasury holds at the Fed, has been forced to run down to basically pay for US government spending in lieu of issuing lots of debt through this period, this interregnum. And as a result of that, a lot of money has flowed into financial markets. They've changed direction of policy very clearly, and they began to do that really late in 2024, but that's really carried through this year. So there's a lot of liquidity being issued by China.
All the classic signs are flashing: global liquidity turning higher, Bitcoin dominance stalling, and Ethereum sitting in prime position to lead the next wave. Bitcoin is one that is headed for an unprecedented price milestone, and Michael Howell and Raoul foresee a financial tidal wave that will catapult cryptocurrency to new highs. After confirmed rate cuts by the Fed, Howell says the crypto world is on the brink of something massive. A seismic shift for Bitcoin and crypto, and as the momentum is building, and the institutions are quietly positioning themselves, everything is about to change. If history's any guide, we know what happens when the M2 money supply starts climbing. Capital races down the risk curve. The first stop is Bitcoin, and before long, the entire altcoin market starts lighting up. The stage where prices don't just rise, they launch. Think parabolic moves, broken records, and price targets that used to sound impossible, suddenly looking conservative. So if Pal is right, we're standing on the edge of a once-in-a-generation window, one where crypto isn't just an investment, it's the single most powerful hedge against the relentless squeeze of currency debasement. The next chapters of this cycle aren't going to be quiet. The question isn't if the bull run will heat up, it's how fast you'll be ready to move when it does. Let's get right into the latest interview with Michael Howell, as we'll also hear from Raoul as they give their market prediction for the days and weeks ahead. Drop your comments down below and subscribe if you enjoy the content we do here.
If they did take a lot of liquidity out, because it would basically end this bull market pretty abruptly. And I think that's basically the big concern. Now, as you know, we look at global liquidity. That's really the main focus of our research. That was something that we began actually decades ago, right back at the end of the 80s when I was at Salomon Brothers. And that was really when world financial markets were beginning to open up, and global liquidity was really the main driver. And it's sort of come back certainly into fashion in the last 5 to 10 years, particularly with in the wake of the GFC and COVID and whatever. And now in many cases, market movements are all about global liquidity, particularly if you look at Bitcoin. So it's clearly a major issue to look at. I mean, basically what we're seeing right now is actually reasonably good liquidity conditions in the world. I mean, that's fair enough. That comes through from partly technical reasons. The Federal Reserve in the US has had to address the debt ceiling, and as a result of that, the Treasury General Account, which is maybe sounding a slightly wonkish concept, but that's the bank balance that the US Treasury holds at the Fed, has been forced to run down to basically pay for US government spending in lieu of issuing lots of debt through this period, this interregnum. And as a result of that, a lot of money has flowed into financial markets. On top of that, we've also got a more structural factor, which is, I would say, generally more positive. And that is what China is doing. China's definitely adding a lot of liquidity to markets right now. They've changed direction of policy very clearly, and they began to do that really late in 2024, but that's really carried through this year. So there's a lot of liquidity being issued by China. And you can see that very much, I think, in what's happening to the gold market. The fact that the yuan gold price has rocketed is, I think, pretty much testimony to the fact that the Chinese want to devalue the yuan, certainly as a paper unit against real assets. And they're doing that through injecting lots of liquidity. The question mark, I think one's got to have, and the reason that we're sort of pondering this and maybe slightly concerned, is a lot of the rhetoric that's coming out of the Federal Reserve is all about still balance sheet shrinkage. They want to get reserves down, so they say. That's reserves of the banking system. And if you look at their plans are that the balance sheet will continue to shrink through end 2025. And that means actually reducing bank reserves quite noticeably if they're going to hit those goals. Now, I think it's fanciful for them to do that. I think it would be crazy, in fact. There's a great deal of cash, certainly in dollar markets right now. That may actually explain why the dollar's been soft on top. I think that's a thought worth holding. What I want to do is to add a thought to that, and that is that maybe we're looking at the wrong vehicle when we're looking at the Federal Reserve. And maybe the Federal Reserve is actually deliberately wanting to pare down its balance sheet, because what it realizes is going on the other side is a lot of liquidity creation or proxy liquidity creation by the US Treasury. And that is coming really as a result of two things. One is that we know that the US deficit is blowing out and it's becoming more and more difficult to fund. And secondly, it's becoming particularly difficult to fund in a world where yields on long-dated coupon debt, in other words, government debt, are actually rising. And although I know the rhetoric that's come out of a lot of the media is that the US is finished, and the US extraordinary privilege or extraordinary the exceptional performance of the US is now over, well behind us, and people want to sort of hit on the dollar and hit on the treasury market. That's actually a fake narrative. If you look at the data, it's not that US yields are driving world yields up. It's actually that world government bond yields are driving US yields up. And that's really the paradox here. The US hasn't lost any of its safe haven status, as far as we can see looking at the data. What you're seeing is actually very clear rises in Japanese government bonds, JGBs. Yields are starting to soar there. And also in Europe, you've seen noticeable increases both in UK gilt yields and in German bund yields. The German bund yields have been going up really because the debt brake has been taken off back in March in Germany to afford a lot of this defense spending, which is likely to be an extra burden on European governments. So that's really the overview picture. Are we bullish? We're certainly bullish near term. I think there's money going into markets and there's a lot of liquidity around.
Raoul Pal weighs in and gives his take on what's driving value and price in this exponential age for crypto.
So one of my mental frameworks for crypto at large is this is a whole new world we're building, and we've got these frontier countries that are emerging. Right, Bitcoin was the first. It's like the Switzerland of the space. Then let's say whoever is the United States, whatever. But we got the Ethereum economy, the Solana economy, and we'll have a few other really large-scale economies and then other small, vibrant ones.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
As I say, I raise a question mark about dynamics through the rest of the year. But, the question is does the Treasury undertake what may be called a sort of secretive easing through the bill market to try and get, try and afford some of this debt? And the problem they've got is with yields rising globally, they're being forced into the short end of the market. And that's effectively, proxy liquidity creation. China's a very different situation. And China needs, a script by itself. The fact is that everybody is written off China, and they're saying China is mired in debt deflation, the banking system is bust, the financial system's going to fall apart, et cetera, et cetera. This is just sort of the narrative that we've currently got, which is very anti-China. I think the reality is that, as I've long said, the Chinese financial system is actually quite straightforward. What they need to do beyond anything else is to devalue debt, and they need to inject a lot of liquidity into the Chinese money markets. And that's really in the gift of the People's Bank. And it's a decision the People's Bank will have to make. And what I'm arguing is they're now making it. For a long time, they did not because they wanted to hold the yuan stable against the US dollar. But actually now they seem to be more flexible on the currency. And in particular, what they seem to be doing is letting the currency devalue aggressively against the price of gold. Now, that's a story in itself, but I think it's a very big story because what's happening is that China is reflating. And I think that reflation is starting to come through in terms of world activity. And what you're seeing is a very significant rebound going on in the world economy. Now, let me just evidence that. So I'm going to go back to these slides. So this is the picture for China. This is showing the People's Bank's net liquidity injections into the system as a rolling 6-month sum measured in terms of billions of yuan. And what you can see is that there's been a steady build-up, but let's contrast the picture now in, let's say, the first half of 2025 with what you saw through most of 2024. So through most of 2024, their liquidity injections were going down, and then they've basically turned. Bear in mind, this is a rolling 6 months, so it's really giving you the trend. That data is seasonally adjusted, so it takes out things like the Lunar New Year and the great seasonality in Chinese money markets. But it's very clear that they're treading a new policy path. And what I think they're doing is they're trying to devalue the yuan. Now, this chart is illustrating the yuan gold price and the yuan US dollar cross. Now, the reason for showing the two together is that what I'm trying to do is to contrast the fortunes of the yuan dollar with the yuan gold price. The yuan dollar in black is shown on the right-hand scale, and that's been, generally speaking, quite stable, although you can see that, it has generally drifted weaker over time. The Chinese have been trying to hold it down into a range of, let's say, around, for argument's sake, say 7.1, 7.3 against the US dollar, and it's basically beginning to weaken, more through that level. Now, I don't think the yen dollar is really should be the focus, but everyone's looking at that.
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Powell says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Powell says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Powell predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. The bottom line, Bitcoin's next big move depends on how this plays out.